I set an expectation for price movement. So this is what we do, right? In a pro membership, there's an underlying assumption that I understand price movement. I set expectations for most probable price movement. I set up a trade to take advantage of those expectations.
Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week.
If those expectations are going to play out, the price should behave a certain way, right? I understand that the price should behave a certain way if this price expectation is going to play out for this trade. And then when I get a change in behavior in the price, that means something to me because I understand price movement and I understand that, well, if my scenario in price movement was going to play out, this shouldn't happen. This did happen. Okay, now I have different expectations for price movement because that happened. Now I change my trading strategy even in the middle of a trade. Does that make sense? So because now I'm at the level where I'm not learning to understand price movement necessarily. I'm not learning to understand my structure. I'm not learning to build disciplines, right? That work has already been in play. I have specific goals. I have specific expectations for my price movement, and then I trade those expectations. That's very different than a stage 3 trader who's learning an M3.4U, who's learning to do, who's trying to learn discipline, who's trying to learn to lose well and build these solid practices. And the reason I want to build these practices is because without them, I can't be disciplined enough to know when to switch my trading strategy. I can't be disciplined enough to get out when I'm supposed to get out. I can't be disciplined enough to go in when I'm supposed to go in, right? So that is where you are. So it all depends on where you are and what your objectives are at your level. So what I'm saying makes sense. The goal I had in mind with this question was to save a trade, avoid a loss, or minimize a loss. So I'm thinking this as a stage 4 action, right? So this is starting to bring in some context, right? And this is exactly what you want to do to yourself. It's not just one of the reasons I get on people about asking good questions is because if you're asking me that question, you're also asking yourself that question. If you're asking yourself a question you cannot answer, it creates stress. Like if I have very clear goals of what I want to do and what I'm trying to accomplish and a good understanding of what I'm doing, I can create these really good questions that have very easy answers. Chris Howard, one of my mentors, right? A problem well defined is a problem half solved. If I don't define the problem, I can't answer it. If I don't have a good, well-defined question, I can't answer it. And a lot of us ask ourselves questions that can't possibly be answered. How can I win this trade regardless of what happens in the marketplace? Well, you can't. It's not a useful question. But if I say, how can I win this trade if the market does this and that, then that's much more useful, right? My question to you is, why the hell are you trying to save a trade? And this is like a question I got on YouTube the other day. It was in the context of my stage 3 M3.4U examples I do on the winning trade. What do you do? How are you handling this? I want to see a demonstration of how you're handling this market in, how you're handling this price movement and dealing with the losses or avoiding your losses. My answer to that is I'm not trying to avoid my losses. I am trading this in a manner where I'm non-subjective with price movement, meaning I'm completely freaking ignoring the price. I am maintaining my discipline. I'm entering the trade on the day I usually enter the trade. I'm making my adjustments when I'm supposed to make the adjustments. And if I draw down at a certain point, I take the loss, which means I took a normal loss during the trade, and that should be expected. Trade wins 80% of the time. It's going to lose 20% of the time. This is normal. There's nothing crazy. There's nothing to demonstrate. It's the trade takes a loss and I move on, right? This is like a super important discipline to have in trading. It's like some trades work out, some trades don't. Oh, well, right? Let's move on to the next one. That's literally the mindset that you have to have. It's like, it's not about saving a trade. It's about winning over time. I don't have a goal to save a trade. I like never have a goal to save a trade. Even in my most subjective trades, my goal isn't to save a trade. My goal is maintaining a good risk reward probability structure based on what the price movement is doing. I look at the trade and I say, hey, what does this market movement mean? How am I positioned? What's my risk reward structure? Is it worth trying to stay in this, or should I go do something else? Right? So if I get in this trade and I was expecting the market to go up and the market went down and now it's drawn down and the trade's crap, the trade's crap. Okay, right? It's not about like I have to save this trade. It's like, oh, the trade didn't work out. Okay, what's my next best step given what happened in the marketplace? So this is why the stage 3 stuff is so important. It's like some trades lose. It doesn't matter if I'm subjective with the trade or I'm non-subjective with the trade or if I'm directional with the trade or if I'm trying to do a positive theta trade. Some trades lose. And you want to ask yourself, it's like, okay, I have this trade and now it's drawn down. If I were to enter a trade today, would I enter this trade? If the answer to that is no, I would not be in this trade, then get out of the trade. Go into something else that you would be in today, right? Right? It's not about like saving a trade and minimizing the loss on a trade. It's about making money over time and making sure you're not taking on too much risk. I mean, there are times when you draw down so much where you're just like, I can't have any more risk. Now, trying to explain like a lockdown thing that we do sometimes in the Go membership. It's not necessarily about saving the trade. It's like, I can't take in on any more risk. So I'm going to lock down my structural risk and I'm going to wait this out and see if the trade comes back, right? Which sounds like I'm trying to avoid a loss or minimize a loss. It's like, no, it's like I have very little risk in this position and the trade and the market might come back. And in other words, I have the luxury of sitting in this trade without having to worry about losing too much money. And if the market happens to come back up, then I'll be profitable again and I'm back in play. Right. So it's like, okay, this trade's out of play. I'm gonna sit in it because who knows, right? It may come back into play later on. Or I could exit completely, I could enter something else, which goes back into if I were to a lot of times if I'm in an M3.4U and I'm a stage 5 trader and I'm analyzing the market, a lot of times if I get to a loss to the downside on an M3.4U, a lot of times the market's due to bounce. And I want to be in a bullish vertical anyway. And if I can modify this trade so I'm still in a bullish vertical and I have time, then and I don't really have any risk on the table, then I'll just put it on, right? If that doesn't work out and I can't do that, then I'm just going to exit and I'll go into something else if I have the risk available to me. So in other words, when we start talking about trading, you want to have a certain amount of risk within a certain amount of time frame that you're willing to take on trades, right? And losing, if you're drawn down too much for your time frame, then you're just out of the market. Or I'm in a no risk trade that might make money if the market goes up, right? So I'm in something like out of the money vertical. I'm hoping that makes sense. I'm talking and I know I have something in mind that you guys don't. So my point being is it's never really about saving a trade.